In this video, we are going to look at one of the important topics, which is TDS on sale of property by an NRI. NRI here stands for non-resident Indian. Now, it may so happen that an NRI, a non-resident Indian, may have a property in India. This property may have been acquired when he was a resident or might have been acquired once he became a non-resident for Indian tax purposes. But the condition is that when he sells this property to a buyer, again, the buyer may be in India or may be outside India, that is not relevant. What is relevant is that when the sale of property is done, the concerned person is an NRI for Indian tax purposes. If these conditions are met, then the buyer, when he is making the payment to the NRI, is under an obligation to withhold tax from such payment. The rate of tax for such payment could be 20 or 30%, and of course there will be additional surcharge which will be applicable on top of these rates, and the amount on which this has to be withheld is the gross payment. So some of the things we are going to look at now is what is the reason why such a deduction is required. Second is, what about the rate? Is there a possibility that this rate of deduction can be reduced? And third is, if it can be reduced, what's the process? And fourth, if that process is not followed and the tax is withheld at 20 or 30%, is that the end of the road for the seller? So first question first, why is this TDS provision applicable? The provision is applicable because, an NRI is staying outside India. If he sells the property, gets the payment, and later on does not make the taxes to the government of India, they do not have a recourse to go and collect those taxes from some other country. That is the reason why TDS deduction is required, and required at a higher rate. For residents, the rate of deduction of TDS is 1%, but for non-resident it is 20 or 30% depending on whether it's a short-term or a long-term capital gain. The second part is the rate of TDS. Like I mentioned, it could be 20 or 30%. And how to reduce it? To reduce this rate of tax, what you can do is the seller can make an application to the income tax office saying that I am selling this property, this is the amount of capital gain I have on it, and this is the tax which is payable. So please give me a certificate for either nil rate. A nil rate will be applicable when there is no tax payable on such sale of property, or at a lower rate. The process for this is fairly complex, I would say. It's not as simple as it sounds, because when you apply it to the government, you have to provide them with your current year tax computation, your earlier return filing status in India, whether you have any other taxable income, what was the cost of acquisition of the property, what is the sale price of the property, any expenditure you are incurring, and many other things which have to be submitted along with the application. The general timeline is 4 to 5 weeks, which is what the tax office takes, but it can take even higher also, depending on the case and the speed at which the tax office processes it. What are the factors which are relevant for grant of certificate? Like I mentioned, your sale consideration, your cost of acquisition, your cost of transfer, and how you are paying taxes in India on any other income, etc., are some of the factors which are considered by the tax office. This question is something which is very, very fairly and commonly asked by various clients who come to us, is that what if the TDS is deducted at a higher rate? So let's say, for example, I have a sale consideration of 100, my cost of acquisition is 20, the gain is cost of acquisition is 80, gain is only 20, and if I apply 20% tax rate on it, my tax is 4 rupees. But the tax which was withheld by the buyer is 20. So if the TDS is deducted at a higher rate, will I get the difference between 20, which is deducted, minus tax payable, 16, back from the government of India? The answer to that is yes, you can get this money back from the government, but you'll have to file your return of income, and the refund will be processed after the tax office is satisfied that you've claimed your computation properly. With that, we come to an end of this video. If you need any help in the preparation of these documents, what you can do is you can reach out to us at the link given in the description, or drop us a message at the numbers which are highlighted at the bottom of this screen.